Welcome to the IIEX template on market valuation. This template looks at market valuation using the Shiller PE. Now, to get started, all the yellow areas are input areas. Their yearly interval used is 8 years. I recommend 8 years because it seems to fit the historical data very well. Although you can change the 8 years to anything you want. If I change it to 10, you'll see the numbers on the left change, going back 10 years from the present. I'll leave it at 8. Now the graph below is a picture for 25 years, which is right here. You can change that to include any time span you want. Now over the 8-year interval period, it calculates medians. These medians are put on the chart, and the gray area highlighted in between basically represent a normal range. In other words, it's hard to tell whether the market's either overvalued or undervalued. So I guess we'll say it's more in the fair value range when it's in the gray zone. Now, you can take a look at an optional end date, like the internet bubble back in 2000 was pretty extreme, and the blue line is the median, not the median, the blue line is the Shiller PE at the time. So we can put an optional end date in of 2002, and we see what things looked at like during that time. Again, the 8 years goes back from 2002. New medians are established as if it was, we went back into that time frame. And again, you can see it was way overvalued in 2000. And you see the bull market that preceded it just before that time. Pretty long time span. Delete that. And over on the right is a market valuation gauge. And at present, it shows it entering into the overvalued territory. Yellow is caution and green is undervalued. In other words, you have more possibility of a larger gain when the needle is in the green than in the red. For instance, we'll go back to 2009. And you see if you bought in 2009, the needle was back in the green. Of course, understandably, there was a panic and lots of fear, and that's why the market did what it did. But those brave enough to buy at the time did quite well. Bring us back to the present. And again, you can look at any time frame you want by using whatever optional end date you want. Again, we'll go to 1929. And you can see how it was pretty extreme at the time. Of course, hindsight's 2020, but this gauge predicted it pretty well. Now, if we go to the market gauge sheet, you can see the yearly historical valuation, in other words, where it was at the end of each year. And actually, it turned red in 1989 and just continued on until the bubble popped. Went up quite a bit. And then in the 70s, called for things being undervalued, and it calculates numbers back to 1930. And again, this template, you need the SMF add-in installed to download all the data. And that's a summary of market valuation using the Shiller PE. Any questions, you can email me at iiex@live.com, and I'm Dave.